So you can check that one, Basi. April 2022, question 2B. Na Amua and Beba, tuangalie hiyo alafu tuende kwa complete records maswali zake. Amua and Beba have carried on business for the last several years under the trade name AB Partnership. So you have AB Partnership there. So we're dealing with April 2022 for those joining us online. Miriam, I think we've asked about this question. So under the trade name AB Partnership, they share profits and losses equally with capital contributed, earning interest at the rate of 10% per annum. So interest on capital is 10% per annum. Then you're told that the following details relate to AB Partnership. The following details relate to AB Partnership's transactions for the year ended 31st December 2021. Then we have the first one, Amua and Beba capital accounts reflect credit balances of 1.2 million each. I sent the link to this other person. Sorry for that. Now, Amua and Beba have carried on business for the last several years under the trade name AB Partnership. They share profits and losses equally with capital contributed, earning interest at the rate of 10% per annum. The following details relate to AB Partnership transactions for the year ended at 1st December 2021. Now, even when you look at those details, the information in itself is also incomplete. Hatujapewa income statement, so itabidi tutengeneze. Amua and Beba capital accounts reflect credit balances of 1.2 million for each. So they will have their capital of 1.2 million each, meaning the interest on capital will be 10% of 1.2 million. On 1st April 2021, they introduced a new partner, Chanda, who was to contribute 1.2 million as his share of capital. They agreed on this day to share profits and losses in the ratio of capital contributed proportional to the period of the year it was invested. And that this sharing ratio be backdated to the start of the year 2021. The start of the year 2021. Importantly, when you admit a new partner, biashara zinakuwa mbili. Sio. Ukiadmit partner mgeni, biashara zinakuwa mbili. Tunafanya April 2022 for those who are joining us now. Karibuni. Now the costs incurred during the year were as follows: salaries and wages to staff. For staff, is it allowable expense? Salaries to staff is allowable. Sio. It's a genuine expense that we must pay. Electricity and telephone, is it allowable? Yes, it is. Repairs and maintenance, depreciation and impairments is allowable, right? General insurance. Remember the general bad debts for the general insurance, when will be allowed? Sio kwamba jina general. Angalia ni general what. So that one is allowable. Ni insurance. Examiner ni mjinga. Angesema got no option ya kusema insurance. But because anajua jina general itakuchanganya, anakumix. So debenture interest is allowable. Debentures is a invest. So the debenture, that is an interest on investment is allowable. Now amesema it was paid to ABC Limited. So somo katika hapo unafaa appreciate most likely kuna mahali pia kampuni iliingilia. Hiyo biashara ni kama kuna mahali ilibadilika ikakuwa kampuni. First of all, debentures cannot be issued by a partnership. Debentures can only be issued if you are listed. Partnerships are never listed, it's companies that are listed, right? Debentures, bonds, ordinary shares to the public, things of the sort. Directors' fees, it's an expense of companies here. So zile stories zingine tunapewa, tunafanya tufanye to appreciate kwa hapo ni kama kuna kampuni. Sasa, so that one is an expense for the company. Na wamesema ina include 507, 720 partner salary. Salaries to partners itakuwa disallowable. Then we have legal expenses, are they allowable? Subject to confirmations here. Subject to confirmation. Medical contributions for partners and directors. Allowable, disallowable? So, medical contributions by partners. So only private expense. Inakuwa disallowable. Then we have drawings by Amua, Beba, and Chanda. Drawings is disallowed still. Rent and rates, allowable. Motor vehicle running expenses, printing and stationery, allowable. The following assets were purchased during the year: furniture and fittings and the pickup. Furniture and fittings rate yake ni ngapi kwa leakage? 10%, ndio. Na hiyo ingine pickup ni motor vehicle. Motor vehicle ni 25. Yaliko kwa leakage tu hapo, yote ya kukram. During the months of the partnership, the total salaries to partners were 507, 720. The salaries would be apportioned according to the period each partner served in the partnership business. No problem. The cost of sales during the year of 21.6 million, sales were uniform at a margin of 25%. Now, margin is profit on sales or profit on cost of sales? Margin is profit on sales. Now, unfortunately, examiner ametupa cost of sales. So you need to be smart and get what? Markup. Markup. Kama margin is 25%, markup itakuwa, you good accountants? Ama let us not be good. Kama margin 25%, markup inakuwa? Kitu kama tutaconfirm, ndio. Tutaconfirm. So nebaka inakunyorosha, relax, tutaconfirm. The partnership was converted into a limited liability company on 1st July 2021, with the partners becoming the new directors of the company. So tuko na one partnership to another, then the new partnership to a company. 3 months, 3 months, 6 months. Kazi iko. Then the new firm was listed on the Securities Exchange, but not for purpose of raising additional capital. The cost incurred in listing was 100,000. So that cost of listing will it be allowable?
Disallowable.
Is it allowable? Eba amesema allowable.
Disallowable.
Mmoja anasema allowable, mwingine anasema disallowable. So that one of us will obviously get. But anyway, when we're talking about the legal fees, there's somewhere we mentioned about legal fees relating to raising of funds only through issue of shares to the public. Lisema hiyo ni allowable. Legal fees of issuing shares to the public, that's like the flotation costs. But in this specific scenario, we are looking at it, they're telling us the firm was listed on the securities exchange, but not for the purpose. Of raising new funds or raising additional capital. So obviously, ishajitoa ile opportunity wangekuwa nayo kudisallow, washaitoa. Ile opportunity wangekuwa nayo kuallow, washaitoa. For it to be allowed, it must be an illegal fee you're incurring to raise the funds through issue of shares to the public. Say that. Lakini hapo anasema ilikuwa listed but not for raising the funds. So obviously hiyo inakuwa disallowed. Yeah. Because the only one reason that issuing of funds, the cost of issuing the funds can be allowed is when those funds were issued. The only chance that flotation cost, quotation cost, or listing cost can be allowed is when you are issuing the shares, when you are raising funds by issuing shares to the public. But this is a cost that we incurred, but by not issuing the raising of funds by issuing the shares. So you inakuwa disallowable expense. Sasa the sales and expenses accrued evenly throughout the year unless otherwise indicated. For 10 months, the schedule showing separately the profit or loss for the partnership and the company for the year ended at 1st December 2021. Now, examiner alijua kazi iko hapa ni mob. Na akasema usiseparate hizo partnerships. Hizo partnerships mbili iko ni kama partnership because amezungumzia nini? For the partnership and the company. So hiyo biashara iko partnerships ilikuwa mara mbili. So it doesn't need you to separate 3 months, then 6 months, because the company was introduced on 1st July. It's only 6 months, right? The first 3 months, it was a one partnership. The other 3 months, it was another partnership. So the examiner simply wanted us to combine the partnership together and pia weke separately the company. Sasa, but, the information is incomplete. You don't have the reported profit, right? But ile information iko hapo. Kumbuka, while dealing with questions in taxation, tulisema si ni KRA. Si kama KRA, tumekutana na huyu taxpayer, he does not prepare the income statement, but he has some balances of how he was transacting during the year. Let us, out of the sketchy information that is available, let us prepare income statement so that we can subject it to tax. So working number 1, can we have our profits? So let's start with our workings. So number 1, tumepewa margin. Na margin tumepewa 25 over 25%, 25 over 100. And anytime you talk about margin, it is always profit over what? Profit over sales. Kama tungekuwa tumepewa sales, then life would be very easy. Because I would easily get profit, right? Because I would have the margin, which is 25%, so I get 25% equals to profit over hizo sales zenye nimepewa. Unfortunately, we've not been given the sales, but we've been given what? The cost of sales. So lazima tuwe smart. Na turudi kwa ile F ya baby class. Ile F ya baby class ilikuwa inasema margin iko hivyo, tutafute markup because tumepewa cost of sales. Na markup formula yake tunajua, markup is the profit on what? Cost of sales. Right? So kama niko na sales, can I get the cost of sales? I know that cost of sales is sales minus what? Cost of sales is sales minus profit. The numerator is common. The profit equal the profit. Alafu sales zetu ni 100. Can I get the cost of sales? So I have the sales and I have the profit. Right, you're seeing the point. So staki to grab. Staki to grab. To grab is to Don't know if you see the point. So that now, to get my markup, I'll take the profit amount 25, I divide by sales is 100 minus the profit of 25. So I am having 25 over 25 over 75. You want to make it a percentage, you can make it. So now, can we get our profit? Tumetoa cost of sales. I think 21.6 million. Hizi maswali yasifai kukuja kwa mtihani. Umeona mshtuka. You might reconsider changing your specialization.
Excuse me, sir.
Okay, Miriam.
No, it's Mercy.
Oh, Mercy, sorry. Yes.
Have you just started or there's something before that what you're doing? I've just joined.
No, we've just started dealing with this question. Baada we saw.
Okay, thank you.
Yeah. Hi. So before you read the whole of it, we are dealing with note number 6. So we're trying to get our gross profit. Now, in simple terms, we have now our markup. So tumwambie kuwa 25 over 75 equals to gross profit divided by what? Cost of sales ambayo ni 21.6 million. So can we get our gross profit? There's a cross multiply still. So from the mathematics, naona gross profit itakuwa 21.6 million times 25 divided by 75, right? How much? 720,000.
Oh no.
So 720,000. $7.2 million. 7.2 million, thank you. Hiyo ndio actually, I think hiyo ndio ilikuwa catch kwa hiyo swali. Ukishapata the gross profit, everything else now flows. So you can now handle the question. So you have A, B, and C. A, B, and C, and ABC Limited. 2021 taxable income computation. So tuko na 6 months. Kwenye tuko na A, B na C. And we have another 6 months where we have ABC Limited. So the examiner was very keen. Akasema, the schedule showing separately the profit or loss for the partnership. So partnership for the two sets of partnership we combine together. So partnership and the company for the year ended that 1st December 2021. So you can put our figures in shillings. Then tuanze na nani? Tuanze na gross profit. 7.2 million divided by 2. 3.6. So 3.6 million. We put it in thousands of shillings. So 3.6 million, huku pia ni 3.6 million. Looking at that story, sijaona any other business income, foreign exchange gain that was realized, discount received, insurance compensation on stock. There's nothing of that nature. So after the gross profit, can we less allowable expenses? So less allowable expenses. So we go point by point. Now, note number 1, Amua and Beba capital accounts, those takuja baadaye on allocation schedule. On 1st April, they introduced Chanda, no problem, akaleta capital ya 1.2 million, still niko allocation schedule. Remember, we are not adding back anything, right? We are lessing the genuine expenses because there is no profit to adjust here. See the point? There's no profit to adjust. We are preparing the income statement afresh. But now only by considering the genuine expenses, the expenses that are allowable. So note number 3, the cost incurred during the year were as follows: salaries and wages for staff. Can you list that one?
Yes.
Salary to staff. There's no any other information about them. 1083,000, 50%, 50%. 541, 500, and 541, 500. Electricity and telephone. Half a half. 190. 197. 184. 194. 700. 194, 700. Repairs and maintenance. Two 94, 400 by 2.
147, 200. 47, 200.
Thank you. So 147, 200. Kazi ni pale tu pale kwa GP. Ndio kulikuwa na catch. Depreciation ni kelele, right? General insurance. 35, 500. 235, 500, each one of them, right? 235, 500. Eventually kelele, still. Eventually kelele is allowable. Director's fees. You have portion director's fees. So how much do you put here?
547.
There we put a dash. Logo kwingine tuweke ngapi? The difference, right? 10, 15, 440 minus 507, 720. Remember, 507, 720 is salary to partners. And salary to partners is fully disallowable. Difference msema ni ngapi? The same. 507, 720. And remember to show your workings. You see me, I've shown mine. Taxation, show all your workings. Legal expenses. There's no information about them, right? So make an assumption that makes your life easier. So you assume allowable, disallowable. Disallowable, sawa, inakubalika. Even assuming that it's disallowable is allowable. Because the examiner is silent. Medical contribution for partners and directors. Unit disallowable, still. Drawings. Disallowable, right? We don't allow people to make some drawings, whether of goods or of cash. Rent and rates. So rent and rates. 350, 960, a half of it. 157, 90. 157, 980. Motor vehicle running expenses. $500, 760, 200 and what?
380.
250,
380.
380. So 250, 380. Printing and stationery. Sixteen. 16 to
16 to 6.
So 16 to 60. The following assets were acquired. Can we have the furniture? The capital allowance on furniture, 10% of it 192. That is 19,200, a half of it.
9600.
90, 96.
9600.
Thank you. So 9,600 for each. Then we have pickup.
100 now.
Pickup will give it a 25%.
Mom, I do want to pay now.
So 25% of 2160. Percentage. That is 55.
That's 25. Yeah.
3,000. This is 216 or 2,000. 2,700. It's coming from the car. It means static issue. Okay. Niongeze 0.1.
No.
Niongeze 0.2. Hivyo. Mbona inakaa uongo? Inakaa ukweli. Inakaa ukweli. Niache kuwashtua. Sawa. Inakaa ukweli. During the month of the partnership, the total salaries to partners were that much. Send up allocation schedule. Cost of sales, note number 6, we've already taken care of it. Note number 7, the company, we've already taken care of it. There's an expenses. We are done. So get taxable business income. Then if there is any other income, Other income sijaiona yoyote. And we have our total taxable income. So ile figa utapata hapa sijui ni ngapi, utaileta hapa. So you have it there. Partnership, other incomes don't appear hapa, but other incomes will go to the allocation schedule. But for the business, for the company, other incomes appear below the business income. Sasa hapa, by the way, sometimes it's good to be smart. Wakati umehustle na hiyo swali, na hii kitu imekata, what do you do? You let this question go.
No.
Yes, figure yote ya GP. Sindio? But when utachukua hiyo cost of sales uite GP. Si utaanguka tu utanyorosha tu marks za GP. Badala ya kucheza swali yote, unajua hii subject hainanga sijui do anything. Na kwanga attempt on, sindio? Na kwanga hata ikwanga, they're so arrogant. Answer all, thank you. They don't even request you to attempt, they demand. So this working gives you some matata, especially in an examination room. So you can guess the GP. Then after guessing the GP, at least hapa kuna marks. So you end up not getting 0 in that question. Yeah, that's why we always say that sometimes this personal thing doesn't need you to be a genius. Just be smart. And you'll live wakula. Uliza.
Because tunafanya changing matching markup. But it'll be the same.
It's the same thing that you've done. Haiko minus 1. It will only be minus 1 if the numerator was 1.
No, for the new.
Sawa. If margin, acha turudi huko. I hope mlikuwa mnafanya na mimi. If margin is 1/3, markup will be, so 1/3 minus 1. Sio ndo namaanisha 1/2. Sindio? What if margin is 2/5? Will you still minus 1? Then I have to minus 2. Sindio? So hapa itakuwa 2/5 minus 2, which is 2/what? It's exactly what we did here. Our margin is 25/100, so 25/100 minus 25. Here minus 1 yake ni ya kutoa. Sawa.
Let me ask, let me ask. We can't get the sales figure.
We can't get
the sales figure.
The sales figure.
Yeah.
With the information we have, if we need it, we can get it. But do we really need it? If you have the GP, forward ever, backwards never. Because if you start with the sales, you'll do the sales minus cost of sales to get the GP.
Okay.
So the working has already helped you to get the GP. Because with the margin, I can only apply margin if I have the sales. Unfortunately, I had the cost of sales. So the sales, I had to look for the markup inside here, but at the gross profit. So there's no going back to the sales.
Okay.
Yeah. What of the 2 marks? Tax payable or refundable by ABC Limited? Marks mbili ya bure. Sasa ungare basi. Hata isipo assume it's always resident. unless uambiwe mambo ingine.
Hivi.
Sambia neighbor fanye tu 30% of what? Of 12,691 of 12,69,160, ndio. So answering part 2, tax liability for ABC Limited, 30% of 12,69,160. Get that answer. Then the other 2 marks, we are being asked about a schedule showing the distribution of profits among the partners. So distribution of profits among the partners. Allow me to wrap this one. Because hapa tuna distribution of profits, sasa hapo tuna appreciate na biashara za partnership ziko mbili. Kuna time tulikuwa na A na B, na kuna time tulikuwa na A, B na C. So lazima tuzi separate. So there we need the allocation schedule. Allocation schedule tuko na 3 months za kwanza. Hapa tuko na partner anajiita A, mwingine anajiita B na total yao. And we have the other 3 months. Penye tuko na A, B na C and their total. Haya. Tuanze na kuwalipa salary. The information we've been given about the salary. Note number 5. The total salaries to partners was 507,720. The salaries are to be apportioned according to the period each partner served in the partnership business. So that's in 3 months, 3 months. So can we do 507,720 for the first 3 months, so divide by 2? Believe it's a half, right? 507,720, 3/2. So it takes a half. 2? 253. 253. 860. Huku pia tuko na 253, 860. Na so wamesema na ya portion. So we can divide by 2, pata A na B. To be apportioned according to the period each partner served in the partnership. So divide by 2 tunapata 146. 126, 930. So hapa pia tuko na 126, 930 English 2. The other one we divide by 3. 84, 84, 620. So 84, 620 to each one of them. Do we have interest on capital? The interest on capital pale juu kabisa walisema rate ni 10%. The introductory paragraph kabisa. 10%, sio? Alafu note number 1, Amua na Beba waliintroduce capital ya ngapi kila mmoja? 1.2 million, sio? Alafu 1st April wakaleta Chanda pia ka contribute 1.2 million. As his share of capital, they agreed on this day to share profits and losses in the ratio of capital contributed proportional to the period of the year it was invested, and that this sharing ratio to be backdated at the start of the year. Sasa kila mtu anapata 10% ya contribute, lakini kuwa very careful, 10% is per annum. A was there for the total of 6 months. So 8 upon a 10% of 1.2 million, that is 120,000. 120,000 come and they earn for all the 12 months. Right? So this 120,000, can we get the figure relating to 3 months? I think 30,000. So 30,000 kwa miezi tatu za kwanza, and the remaining 30,000 kwa ile miezi nyingine tatu. Because only a partner for 6 months, right? So need the interest on capital relating to 6 months. Is it the same scenario with B? See, capital yake paid for 1.2 million. So you're having 30K and you're having 30K. What of C? Is it 60 or still 30? Yake pia ni 30. Yeye alikuwa kwa miezi tatu peke yake, si 6. Kwa hivyo ya huyu pia ni ngapi? Ile ya 3 months sasa. Sasa. So the total interest on capital here is 60,000. Na huku kwingine ni 90. I don't see any other thing. We have the drawings, but we don't have the interest on drawings. Drawings don't appear here. It's the interest on drawings that appear here. We don't have commission. We don't have any bonus. So can we have the share of profit? Now the total business income, I can see 1776.88. Sio ni ya miezi 6. Sasa uganya 3 months. 1776.88 divided by 2. How much? 888. 440. So hapa pia ni 888. 440. It's okay. So share the profit. So out of this 888, 440, lipa salaries, lipa interest on capital, unabakisha balance ya ngapi? Before C came in, they were sharing profits and losses equally, right? So if you divide by 2, how much? 290. So 287 to 90. So in total kila mtu anaweza pata. Share of profit for the other 3 months, the balancing figure. Five four four. 580. Alafu hiyo English imekuja hapo imesema even baada ya kuleta C, they still share the profit as per their contribution of capital. The contribution of capital is 1.2, 1.2, 1.2. Like a backdated, so they still share equally. So divide by 3. How much? 5? Tuweka hapa 0. Angalia vizuri. Haka ni 253.
Yeah.
3 hapa ni 4. Check well. Because kuna hapa 8 na kuna hapa 3. The difference will not be 0. So sawa. If you divide by 3, you get 181. 527. 181, 527. Hii total unaweza acha tufanyie example. Then now you're supposed to bring in other words. Unfortunately for us, there is none. And now we get total taxable income. September 2021, question 4B. Jirani and Mwema have been partners trading as JM traders since 1st January 2019. They have not filed individual income tax returns for the year 2020. The Commissioner for Domestic Taxes has issued an estimated assessment of 940,800 to each of the partners for the year 2020. They share profits and losses in the ratio of 2:3 to Jirani and Mwema respectively. So Jirani gets 2, Mwema gets 3. They're preparing to appeal against the assessment and have approached you for tax advice with the following details. So if you're going through a question in tax, alafu unasikia examiner anakupa hicho cheo, they have approached you. Please don't let him down. If you approach him, right? So you have the cash flow summary. On the debit side, that is how cash came in. Kuna balance brought forward on 1st January 2020. Capital, Jirani na Mwema wamecontribute capital yao iko hapo. Receipts from debtors, it affects our debtors control account, right? Cash sales, will help us get the total sales. Rent income is the other incomes. Rent income is other incomes. Sale of furniture. Is it taxable, not taxable? We are not in the business of buying and selling furniture, right? So you'll see a biashara and taxable. On the payment side, payments to creditors will affect our creditors control account, right? Purchase of furniture. Is it allowable? What we allow? The capital allowance at the rate of. Do you remember the 10%? Kama ukumbuki iko kwa like, usijali. Kishangaa wengine wanatoa 10%, iko kwa like. Ni vile tu waliona furniture ingine mahali wakatumia 10%. So it hasn't changed. Motor vehicle expenses are they allowable? Yes, they are. Electricity, rent, yes. Purchase of motor vehicles. We allow that one, but we give it what percent of the capital allowance? 20%. Salaries and wages allowable unless kama kuna partners, ndio. Office partitions, we give it what percent? 10%. Hiyo pia ni 10%. Ni bame confirm na tunaapprove. General expenses are they allowable? Unless otherwise stated, ndio. And we have the balance current forward, hiyo ni ya cash, hiyo ni ya balance sheet. Sales and purchases for the year were understated, shida zimeanza. Were understated and overstated respectively by 20%. When sales are understated, profit is also understated. Si sales ni kama income. So income is understated, profit will also be understated. How do we correct? We add or we less? Sema tu we add, ni ukweli. We add, it's true, we add. And the fact, yes, we cross it up. And the purchases are overstated, profit is understated. Kumbuka ile rule tulimake. Opening stock and purchases in direct relationship with profit. Right? Zikiwa mingi, profit ni kidogo. Zikiwa kidogo, profit ni mingi. Closing stock and sales, direct relationship. If they're overstated, profit is also overstated, and vice versa. All the cash sales were paid into the bank with the exemption of 528,000, which was debited in the income statement as general expenses, but related to the following items. Hiyo ndio ile 528 yenye iko pale juu. I think general expenses. Note number 3 is a breakdown of what general expenses represented. Partners' children's school fees. Is it allowable? Disallowable, right? Purchase of goods. It's a genuine expense, right? Tax expenses. Mambo ya tax hatutaki kusikia, ndio. So disallowable. Insurance policy for partners line. Allowable, disallowable. It's private. So disallowable. Then computer software. What do you allow? The wear and tear of what percent? 25%. And we talk at 20% 2020. So total says in 25%. The partners are entitled to interest on capital at the rate of 10% per annum on the capital contributions. The interest on capital was included in the figure for purchases for the year. I think an error there. So our purchases have an issue. Our purchases have an, so we need to get that interest on capital to drive the purchases figure. The cost of furniture sold was 192,000 and had accumulated depreciation of 16,800 as at 1st January 2020. The profit on disposal was credited to the income statements for the year ended that 1st December 2020. So profit zetu ziko na shida. So the gain on disposal iliongezwa kwa income statement yetu, lakini tunasema hapana, hiyo ni makosa. Because we are not in the business of buying and selling furniture. Are we able to get the gain on disposal of that furniture? We sold it at how much? We sold it at 204,000. Still, after when we sold it at 204,000, what was its net book value? Cost is 192. Less depreciation of 16,800 will be remain with. So the furniture valued at 175,200 is being sold at 204,000. At the profit of how much? Kwa cash book summary. Sale of furniture. Sale of furniture. Sasa tuko pamoja. Na net book value yake tupata 170 something, ndio. So can we have the gain on disposal? 28,800. So that 28,800 was included in the income statement as an income. We need to remove it. Sasa hapa ndio ile tulikuwa tunasema incomplete records. The information is incomplete. Get something out of it for tax purposes. Tuone next nasema nini? Other information provided was as follows. Inventories, hiyo ni opening na closing stock. Creditors for goods, only creditors. Debtors for goods, those are receivables. Electricity expenses prepaid. Prepayment ni asset ama liability? We shall see how to deal with it. Is an asset, right? Rent owing. Owing is a liability. It's come accrual. Place and wages owing, the same scenario, right? Love furniture. About furniture, we clarify to hapo chini. Tulikuwa naita 192 ambayo tuliuza. So at the end of the day we'll back in at 240. The one that we had acquired. The business reported a net loss of 509,400 for the year ended 31st December 2020 after deducting the following expenses. Salaries and wages for the year ended 31st December 2020, which included partner salaries for Jirani 120 and Mwema 96. Are they disallowable? Salary to partners is disallowable, right? Right? Rent expense for the year included 20% for private residents for Jirani, while electricity included 30% electricity bills paid on behalf of Mwema's private house. Those are mainly disallowable still. Capital allowances in respect of the business had not been considered. However, depreciation had been debited in the income statement at the 20%. When you debit, it's like you less. Ni kama expense. Kama expense. With supporting computations, advise the partnership on the accuracy of the estimated assessment issued for the year 2020. Prepare a schedule of total taxable income for each partner for the year 2020. For only 14 months. 8 months plus 6, no problem. Now, the easiest way of handling such kind of a question, wametupa the reported loss. So because we've been given something from the income statement, the reported loss, we can still adjust it. Lakini ili to adjust, lazima tukue na workings. We need our sales. We need our purchases because of the note number. Because of note number 1. Because whether we start from the reported profit or the reported net loss, or we prepare the financial statement afresh, lazima note number 1 tuishughulikie. So we need to get our correct figure of sales and our correct figure of purchases. So as a one thing, let's start with the debtors control account. So workings number one, debtors control account. Debtors control account. We can put our figures in thousands of shillings. This one is an asset account here. Balance brought down of our debtors. Note number 5, right? 200 and what? 288. Right? What of the balance carried down? 430 ngapi? 432. Transactions during the year. We have some receipts from debtors in the cash book summary, isn't it? So new receipt from debtors, we debit the bank, we credit the respective account. Bank inaongezeka, tuna debit na credit your account, sio? So you have receipts and we received how much? 2040. Sijaona mahali bad debts, sijaona mahali return inwards, credit notes, debit notes issued, there's nothing. So how much is our credit sales?
$17.52.
Credit sales? 218. So 2184. Then we know that total sales equals to cash plus credit sales. We have the cash sales. 1200 plus what? 1200 plus 2184. Which gives us 3384. Now that 3384 it got understated by 20%. So that figure is what percent? It is 80%. So hold on it a little bit, tutaishughulikia baadaye. Sasa tutaishughulikia baadaye. So working number 2, creditors control account. Balance brought down of our creditors. 400 and what? 480. We have the balance carried down.
Yes.
330,
330.
right? Transactions during the year. We have some payments. We paid our creditors how much? 1056. Ndio. When we pay the creditors, bank reduces. So we credit the bank, we debit the respective account. So how much kuna payments? 1056. So how much is our credit purchases?
Really?
11. We balance it at how much? 9, 12. 9, 12. Then we know that total purchases equals to cash plus credit purchases. Cash plus credit purchases. Do we have our cash purchases somewhere? Ama Swahili haina cash purchases? Iba naona kitu before the break? Huh? Anybody sing 240? That's the exam na ni feature. 240 si ya furniture. Purchase of goods. Did it come from the cash receipts? Did it come from the cash sales? Yeah. So whatever we receive through our cash sales can be our goods. So goods ni cash purchases. So we are there at 240, right? Note number 2, still. So plus credit purchases of 912, giving us 1152. But kuna mahali walituambia kwa purchases iko na shida. Note number. Kuna hiyo note number na kuna mahali pia the interest on something. The interest on capital, note number 3. Note number 3. So they were entitled to interest on capital at the rate of 10%. The interest on capital was included in the figure for purchases. Right? So hapa to less nini? We less interest on capital. 10% of pale juu kabisa jirani alicontribute capital ya 720 na Mwema akacontribute 1080. So 720 plus 1080, 10% of that. 180. So the net purchases. Giving us 972. So here 972, the do not adjust note number 1 is overstated by 20%. Looking at the information that we have, na nikiangalia hiyo story yote, I just need to adjust for note number 6.3. Then I can start killing the 2 birds with 1 stone. Hi. Now, capital allowances, so 6.3, I hope we're all there. Capital allowances in respect of the business had not been considered. However, depreciation had been debited in the income statement. I want to start from the reported profit. So I'm trying to look for those mistakes that had been done. So here depreciation, I find it so that I can add it back. Right? Can add it back. So as another working, maybe working number 3, we need depreciation. depreciation. So put all assets that are there. Kuna mahali naona tulibuy furniture. Tulibuy furniture at how much? Tumesema depreciation rate ni ngapi? 20%. So you shall look for that figure. Another item that we purchased, do you have motor vehicles? So you bought motor vehicles of how much? 720. So 720 depreciation is 20%. Another asset that we bought, we have partitions. Partitions of how much? 260, 20%. Any other that we have? Note number 2, we have software. So software of 60,000. So 60 times 20%. Any other asset there? Hizo tu. I can only say those ones. So here those figures. 20% of 240. 48. 20% of 720. Sorry? 144. Wewe mwingine 20% of 260. 40. 43.2. Finally, 12. Then finally, can have it as working number 4, capital allowances. Total yake ni? Sorry? 247.2. Right? Alafu tutafute capital allowances zake. So ni kurudia hizo assets zote ukizipea capital allowances. So tuko na furniture. Furniture unakumbuka rate yake? Is it 10%? So this one I know is 24. Motor vehicles, you remember the rate? 25%. 25% of 720. 30. 180. Thank you. Partitions, do you remember the rate? Partitions is 10. By the way, E25, 25 iko na naweza nikakusaidia. Easy rates the capital allowances. You know, at advanced level, we are not even required to read a lot about them, just understanding how to apply them. 25%. Kama unakumbuka, like I heard you saying about 20%, meaning kuna capital allowance kitambo iko kwa kichwa kidogo. Kitambo tulikuwa na classes 4 za wear and tear allowance. We had class 1, 2, 3 and 4. Effective 2020, they were reduced to 2. So all assets that used to qualify for class 1, 2 and 3, sasa ni class 1, 25%. And what are those assets? All self-propelling equipment that moves on earth. Motor vehicles ziko up. That's why anytime you see motor vehicle, nafikiria 25%. Sasa, yeah, so all self-propelling equipment that moves on earth. Sasa, hiyo kitambo ilikuwa class 1 na class 3. Alafu ya pili ni office electronic equipment. Computers, photocopiers, printers, scanners, duplicating machine, ETR machine, calculators, the electronic equipment that defines an office. So hizo na self-propelling equipment that moves on earth, 25%. That's our first class. Alafu the second class, ile tambo tulikuwa tunaita dustbin. Ilikuwa inabeba all other assets that you've not mentioned. Like furniture is 25% because it's not an office electronic equipment, right? And it's not a self-propelling. So any other asset that either it is not a self-propelling that moves on earth, or it is not an office electronic equipment, 10%. That is why partitions is 13%. See, I think of self-propelling. What of the software? So software near office. So that is 60.5%. So 10% is 21.6. 25%, 15. So the total capital allowances, how much? 40.6. Nimaliza. Acha hiyo space kidogo in case of any workings that we may need, so that we now kill the two birds with one stone. So, walijiita na Jirani and Mwema, JM Traders. JM Traders 2019 taxable income computation. 2019 or 2020? 2020. 2020. So 2020 taxable income computation. You can have it in thousands. Then you can start from the reported net loss. Kama uko na option ya kuanzia kwa reported loss ama reported profit, please do. Badala ya kuanza kutengeneza fresh na umepewa the profit. So they reported a loss of how much? Is it 509.4? And it's a loss, you put it in brackets, right? Nambia na iko kwa note namba ngapi? Number 6. Then we add back disallowable expenses. We add back disallowable expenses. As a note number 6 yenyewe. After deducting the following expenses, salaries and wages for the salaries to partners, can we add back? So add back salary to partners. You don't even have to separate them. Just show you're working 120 plus 96. Total inakuja 200 and 216. 216. Then we have rent expense included 20% for private residence for Jirani. We add back rent for Jirani. Rent for Jirani. Na nikiangalia kwa rent, pia iko na maneno pale juu na rent oil. Now, with the first question, let's do the account. Let's do the account, but after the account, we shall agree on the easiest way forward. Kama easiest way itakuwa account, tutaendelea nayo. Kama tuko na alternative, so working number 5, rent expense account. Rent expense account. Is it a liability or an asset account?
Asset. Liability.
Owing is liability, still. Owing is liability. So in thousands of shillings, so liability balance the credit. Opening balance negative rent on. I think 93.6. So 93.6, right? What is our closing balance? 52.8. Transactions during the year. You end up a cash book summary. Rent expenses. 472.8. Ndio. When we pay rent, we credit bank, we debit the respective account. Anytime there's a payment, bank reduces. When bank reduces, we credit it, right? So in a credit bank, the debit accounts. Ndio. So you have the payment, a rent, or you can even call it bank. Payment, sawa too. How much did we pay? 472.8. So how much was the income statement?
For 32.
The balancing figure?
For 32.
Oh, 432.
Yes. No.
432.0.
Yes.
Now, I want us to probably, if we can agree, because that's happening kwa elewana, let's try to be analytical so that to avoid kuchora mati mingi kama watu wa baby class. Now, I have the rent expense account. Anytime I have an accrual at the beginning inamaanisha nini? Nilifunga last year, niko na deni la this year. Yeah. So I closed last year with the liability of this year. So when I'll be paying, any amount I pay this year, sitaanza na kukaba ile deni. Still, actually, nimeanza mwaka, let me put it in the right way. Accrual at the beginning means I'm starting this year with an expense for last year. So kuna deni lirushwa mbele. So any amount that I pay this year will partially be covering an expense for last year. It's clear, which is wrong. So I need to remove that item. That's how. If I have an accrual at the end of the year, means what? That whatever I paid was not enough to cover expenses for this year. So I closed the year without paying an expense for this year. So in simple terms, let me go to the side of prepayments further to make that. We're going to make the statement that will guide us. When I have a prepayment at the beginning, it means I closed last year, but I had paid something for this year. So whatever I'm paying this year is actually a top up on what I had already paid. So it should actually be a cumulative figure. Ilifunga mwaka kama nimelipa some amount for this year, so I'm only topping up. Right? When I close the year with a prepayment, then that means I have overpaid mpaka next year. But remember, in the income statement, we only need expenses for the year. That's how. So in simple terms, the prepayments at the beginning we add. Prepayments at the end we less.
Wait for her.
Make your statement because I love to get money. More. Make all the statements to your mind, you be clear enough to clarify to the root. So just say this. just put a statement up. You can say here, prepayments at the beginning. Prepayments at the beginning. Better to place your working stuff so that you don't interfere with our example. Prepayments at the beginning we add. Prepayments at the beginning we add, while prepayments at the end we less. Prepayments at the beginning we add, while prepayments at the end we less. Then another point, accruals at the beginning we less. Accruals at the beginning we less, while accruals at the end we add. Accruals at the beginning we less, while accruals at the end we add. Sasa kutumia hiyo ni dakika moja tu alafu tunatoka. Tumia hiyo concept badala ya kung'ang'ana na hii story ya T. Mimi nakuja kitu cha kwanza najiuliza ni hapo kwa rent expense. I start by asking myself, how much was paid during the year? And during the year we paid rent expense of how much? 472.8. So naanza na hiyo, nachukua 472.8. Right? Then in paying 472.8, nilianza mwaka na deni ama nilikuwa nimeprepay? Nilianza na deni. So hilo deni lazima niling'oe. So I less an accrual of how much at the beginning? 93 points. So I less the 93.6. What about at the end of the year? Did they close there with the liability? So that means whatever I paid was not enough. Sindio? Sasa kuna expense ambayo sijalipia ni ya huu mwaka. So I add the accrual at the end, which is how much? 52.8. I'm very sure ukifanyia hesabu utapata this. Sindio? Lakini hiyo figure hatuna, kwa hiyo swali hatuna, we have no problem with that figure. We have a problem with the 20% ambayo ilikuwa private. So whatever we have, we need to remove what?
20%.
Kwa hata hapa working yetu ingekuwa 20% of 432. So how much we add back? So 96 points. Just 86. 86.4. Just like that. That will be my. That will be my.
Yes.
Now, I hope that other aspect will start making some sense. Prepayments at the beginning we add, prepayments at the end we less. Yeah. And we are adding the prepayments at the beginning with an appreciation that there's an item which belongs to this year that we paid last year. So whatever we are paying this year is actually a top up on what we had already paid. Yeah. Na add sababu tulikuwa shailipia last year partially. So ile amount tunaongezea this year is actually an addition on what we had already paid. That's why prepayments at the beginning we add. And the prepayments at the end we less because we are appreciating that we had overpaid. So there's an amount which is among whatever was paid, which doesn't belong to this year, it belongs to next year. That's why you get a prepayment at the end. We are supposed to less. Yeah. Accrual is now the opposite. Kwa hiyo bado hapo rent ilikuwa accrued. So prepayment tunaweza kuifikia tuione kama tuko na electricity. So let's in fact sio note number 6.2 Shall adjust for rent. So can you adjust for electricity? Well, electricity included 30% electricity bills paid on behalf of Mwema. So can we add back electricity for Mwema? Electricity for Mwema. So we need 30% of how much electricity was paid during the year? $93.6. So 93.6. Right? Tukianza mwaka tulikuwa na prepayment ama accrual? Tuko na prepayment. Prepaid electricity expenses prepaid, right? Prepayments we add or we less? Yeah, we add. So we add how much? 566.4. Still. Then we less prepayments of how much at the end? 36. So how much? 30% of the electricity expense for the year? How much? 187.2. Then note number 6.3, capital allowances zilikuwa zijachajua lakini walicha depreciation. Can we add back the depreciation? Tulikuwa tumefanya hesabu ya depreciation tukapata ni 247 point. Nipashe isahau, iko pale kwa point sijakuta 247.2. So capital allowances tuta less. Ndio, tuta less. Haya. Tuangalie huko juu hizo notes zingine. Now note number 1, sales and purchases for the year were understated and overstated by 20% respectively. So sales were understated. Profit was also understated. We add back. So we add back undercast of sales. Sales were understated by 1%. So do 20 over 80. The amount reported was not 100%. The amount reported was 80%. And how much was reported from workings? In 3384. So times 3384. So 3384 is not 100%. It had been reduced by 20%. So if that amount equals to 80%, what will be the 20%? How much? 846. Inakunyorosha unauliza. Purchases nazo zimekuwa overstated. Right? Sales were understated and purchases overstated. So purchases are overstated, profit is understated. How do we correct? We also add back. So we add back overcast of purchases. 20 over the 20 over 120. So the amount is now overstated. The amount is not at 100%, it is at plus 20%. Sindio? The purchases zetu tulipata ngapi? So 20 over 120 times 972. How much is this? 162. So 162. So number 1 is sorted. Note number 2, all cash sales were paid into the bank with the exemption of 528, which was debited in the income statement as general expenses, but related to the following. Ilikuwa debited into the income statement, meaning The general expenses of 528 had been deducted as expenses, right? So can we add back the wrong ones? Like partners' children's school fees, to add back that one. So add back partners' children's school fees. School fees of how much? 96. Purchase of goods, that one is okay, right? Tax appeal expenses. The tax appeal expenses for reporting 48. Insurance policy for partners, we add it back. So insurance for partners, na kama ingekuwa ya staff, ingekuwa sawa, si ndio? Na kama ingekuwa insurance ya nyumba ya biashara, ungesema nyumba ni capital. The insurance is allowable, whether you are insuring the capital item or revenue. So this is 84. Computer software, can we add it back? The answer is yes, back. Why do we add back? Because it had been deducted. Single part of the general expenses. So it was deducted as an expense, we remove it first of all. Then of course we shall give it the capital allowances. So an amount of how much? 60. The partners are entitled to interest on capital, which was included in the figure for purchases. You shall just. Cost of furniture sold was 192,000 and had accumulated it of 16,800. The profit on disposal was credited in the income statement. Less. It was put as an income, right? So I believe with all that, memaliza kusort. Zile issues zilikuwa na shida, how much are we adding back? Yeah. Yes, kuna? Let's go pale juu, kwa cash book summary. We don't have any issue with them. Senior, we don't have any issue with them. We know that any other item that is not here, the examiner had no issue with it. It was used accordingly in arriving at our loss. Ile ilikuwa na shida yenye ametupia kwa additional information. Total ngapi? As long as it's not syntax error, just bring the answer. To 20? 2032.8. 2032.8. Any less capital allowances? Capital allowances tulipata ngapi? To 40.6. Then you also less gain on sale of furniture. Gain on sale of furniture. So look at the sales proceeds with less the net book value. Tulikuwa tumepiga hesabu, si ndio? Tuliuza na 204. Si ndio? Na net book value yake ilikuwa cost minus accumulated depreciation. The cost of furniture is 192, right? Na depreciation yake ilikuwa ngapi? 16 points. So that we show our workings. And the game umesema ni ngapi? 20? 18. 28.8, thank you. So 28.8. So how much are we lessing? 268, 269.4. So can we have our adjusted business income? So we are lessing because it was included in the income statement. It was credited in the income statement, and the gain on sale of fixed assets is a non-taxable income. That's why we remove it from the income statement, right? So remaining how much? 1254 flat. Is that one worthy 8 marks?
Yes.
At advanced level, yes, right? We're not at a small level. We have many people who admire to be at our position, so let's embrace it. Let's embrace it. By the grace. Na allocation nayo wezi ng'ang'ana na 8 marks alafu anakupa 6 marks ya bure uiache ama tabi. Allocation schedule sasa waandike tu moja anaitwa nani, jirani, na mwingine ni mwema, alafu weke toto.
Open.
So allocation schedule. So tuko na jirani mwema na total yao. Can we give them the salary? Salary tulikuwa nazo, sio? Jirani alilipa salary ya ngapi? 120. So jirani ako na 120, mwema ako na ngapi? 96. Total iko ngapi? 216. Do they have anything to do with interest on capital? Walikuwa nayo somewhere? Yeah, note number 3. So you have interest on capital. Yeah, 10%, sindio? So capital ya jirani is 720. So 10% of 720, 72. Capital ya mwema ni 1080 times 10%, 108, sindio? Total interest on capital, 180. Any commission? No commission, right? Any bonus? No bonus. Any interest on drawings? None, right? So tumemaliza. Unajiuliza about the share of profit. So that we have the business income. So from the business, we had 1254. Senior. So from the business, you have 1254. Balancing figure. Balancing figure. 858. Any information about their profits and loss sharing ratio? 2:3 kwa jirani and Mwema, sio? So jirani anapata 2, Mwema anapata 3. Total yake ni 5. So then 858 times over 5. Sorry. 343.2 and the difference 5. 514.8. Then we get the total for jirani and the total for Mwema. Five something. 535.2. And the difference 718.8. Na ili ukue sure kwa umepata this plus this should be this. Hiyo ndio unaambiwanga 10 minutes before ushamaliza maswali, so unaanza kujimakia. Najaribu ku-add uone kama zitakuja the same, unajua hapo iko sawa. And after that, we think about other incomes. Unfortunately or fortunately for us, examiners don't want to clear nini. It is easy to get the 6 marks than 8 marks. Okay. Oh, rent income. Iko somewhere, still. Hapo mahali, sorry. Hapa kwa other incomes. Nilikuwa nimetukumbusha kuna rent income, thank you. But again, I am smart. I don't need to include 0. Because itafika 15 million. Sindio? Na hajaniambia kama ni commercial ama residential. So hapa kwa other incomes, I can put here rent income because examiner is silent, is waiting for your assumption. So make sure you write it. The sababu nimekuta fanya the right thing. So rental income, we assume commercial or residential. Make an assumption that makes your life easier. Residential. So that you put what? A dash. And now your total taxable income.
Ivy,
Yes, Miriam? Si swali kwetu. The thing that repeat it pole kivyako, then look at May 2018 question. May 2018 question 3. Najua sasa hata una nguvu ya kufungua huko. Sifungua huko. Taifungua tu baadaye. Then ukishamaliza kuiangalia, usiangalie na ukose kuandika. Then after all that, you can also test yourself with question 4B. Question 4 of May 2019. May 2019 common. Let me give you those two. I want to stop there. That I let you be. Now you can go and take more water. But genuine water, right?